I am going to actually, go to Partha first. And Parthasarathi, one question that I have is, while we are all gung-ho about FinTech in the room right now, and we are talking about the growth, the venture capital, investments in the space is actually not looking that great when it comes to FinTech right now, okay? So if we look at the first half of 2023 versus the first half of 2022, there has been a 67% drop in FinTech investment. So obviously we know that India is going through a funding winter and so on and so forth, but FinTech has been significantly impacted, right? My question is that what is it, and again, a bulk of that, bulk of first half of 2023 saw a large transaction in PhonePe. So if we actually remove that, the drop would be significant, right? So I want to ask you, what are investors looking at while investing in FinTech? And I'm seeing some eyes from that side in terms of time. So what do you think in terms of investors looking at the FinTech space per se?
Yeah, so maybe I can put this in perspective by giving some numbers, since you mentioned that. I was just seeing some data recently. So this is not about India only. So globally, I think in 2021, the total investments in FinTech were $100 billion. 22, $63 billion. This year, $20 billion. That's how steeply it's fallen. So clearly something is wrong. But actually, when you think of it from an investor standpoint, what does an investor do when the environment is a little vitiated? What do you do when there are geopolitical risks? Remember, all of this money is not India domiciled money. This is money across the world. VC money is largely flowing in from global centers. That money is being held back for some reason, and that is because there is a very enhanced risk perception across the world right now. There is the disturbance that we are seeing in Ukraine. There are economic headwinds. You've got the inflation risks in the US and so on and so forth. That's the larger macro picture, which is generally affecting VC investments at large. The other bit is around FinTech. So what's really happening in FinTech? Just coming down to FinTech. So it is a fact that there was euphoria 2 years back. FinTech is the poster child of any investor, right? Or was the poster child. And whenever there's euphoria, what really happens is, and this happens to all of us as well, in a bull market, we don't diligence our investments as much as we would in a bear market. And I think that's clearly what happened 2 years back. There was a case of FOMO at one level. Investors were jumping over each other to put money into companies because there was this thought that they might miss out on an opportunity. That led to soaring valuations. That led to, of course, extra investments that were made then on promises made by companies which haven't been kept. Now, that's the other part of it. So, for most part, VCs invest on basis growth. I think growth is clearly the mantra that VCs look for. But there is another critical factor that also needs to be taken care of, which is profitability. You just don't grow by burning money. That's never going to get you anywhere. I don't know if any of you watched some of these serials on WeWork or on Uber. If you haven't, I think they're on OTT channels. I don't remember which one. But do watch them, because it gives you a perspective of how startups operate and how VCs think. And in many ways, I think that's what's happened in the FinTech world. I think there were a lot of promises made. A lot of money got burnt. Profitability or growth that was expected did not happen. And which is why, and coupled with these global factors that I talked about, has led to VCs actually thinking hard about the next level of investment and tightening their purse strings. VCs are now actually calling out FinTechs and frankly every other startup to tighten their belts. VCs are actually calling out companies because the profitability metric isn't being met or hasn't been met. So suddenly from the focus on growth at all costs, it's moved to growth plus profitability. And soon it will be only profitability if things continue the way it is today. Sure. But and I think that's a good thing. It also gives a time for startups to actually sit back, evaluate what they're doing. Yes, everybody is on a very fast-paced environment, very different from the banking world. There's enough innovation happening. But just going back to what Mr. Sirin said, as he concluded, the fact of the matter is the opportunity for fintech is still very large. It is, I think this is a blip right now. I think I may have read the same report that you were alluding to. It talked about revenues or the valuation or the value of the business or the financial services business in India being about $400 billion by 2030, of which 70 billion will be the fintech sector. That's about roughly 15%, up from 2% just a couple of years back. Now that's a massive story waiting to play out. So there is still a lot to be done. I think it's still a very, very exciting sector. The investors may have pulled back a bit, but I think it's a blip. They'll come back again.
Yeah. So for all those who are actually looking at starting something in the fintech space or working with possibly fintech startups, what I gather is basically, fundamentally things are going to grow. Because of the macro situation, the funding has reduced. But what has changed is the business model, which is what VCs are looking for: growth at any cost to profitability on day one, or at least path to profitability. Right?